Hello and welcome everyone. Welcome to Symphony AI webinar. Thank you for joining us today. My name is Lala and I'm delighted to be hosting this session on re-engineering the risk-based approach, Agentic AI as the engine of continuous risk assessment and control calibration. Before we begin, a few housekeeping points from us. This session is being recorded and it will last approximately 35 to 40 minutes. We encourage you to send your questions throughout the webinar. Please post them in the chat and we will reserve time at the end to address them. So today we've got a great audience of financial crime, compliance and risk professionals joining us. Thank you for taking time to be here. And as many of you will recognize, the risk-based approach is a regulatory expectation. However, in practice, it often remains periodic, manual, and difficult to operationalize. At the same time, in light of changing financial crime landscape, risk has become continuous, global, and it is also evolving at speed. And increasingly, institutions are being challenged not just on whether they have a risk-based framework, but whether they can clearly demonstrate alignment between emerging threats, risk assessment, and control effectiveness. And this is exactly what we are going to explore today with our esteemed speaker, Elizabeth Callan. Elizabeth is a recognized leader in financial crime compliance and risk management with over 25 years of experience across US intelligence, law enforcement, and the private sector. At Symphony AI, she drives strategy and innovation, developing transformative AI-powered solutions. And prior to that, she worked for the US Treasury's Office of Intelligence and Analysis and DEA Special Operations Division, where she supported senior policymakers across the US government. Elizabeth, welcome and great to have you with us today. And over to you.
Thank you so much, Lala. It's a pleasure to be here with everyone, and thank you for taking the time to join our webinar today. Really interesting story. So much is changing around the risk-based approach and the risk assessment, not only in the US, but globally. So I think where we really want to start the story is kind of looking back at how this work has been done and some of the challenges around it that really paved the way for using the more innovative technology that we have at our fingertips today to try to solve for some of those challenges. So it's always been foundational, right, to everything financial institutions do, the risk-based approach and really that core risk assessment work. But how dynamic has it been, right? Getting closer to being dynamic and continuous is really the goal here. They've been continuously periodic risk assessments where, you're getting a point in time snapshot of risk, not continuously adapting what that risk assessment looks like to how threats are changing, how criminals are changing, your customer bases and the jurisdictions you're operating within are changing. So getting that to be more continuous is clearly a goal. Manual threat monitoring, how we've been going about that in the past has obviously been much more manual, much more sort of cyclical, some institutions much more ad hoc. So we really want to be able to apply technology to deal with that kind of data at scale and at the pace of criminals and how those threats are changing. We had delayed control adaptation. So knowing about the threats is obviously the first piece, but adapting your controls is obviously another key piece of the whole process. And so using technology to make that process more adaptive, more continuous, more fast-paced, and more able to use all of that rich data that's now available to us through the use of agentic and generative AI. And then, institutions operating in silos, right? So fractured understanding of risk across different compliance functions, fractured way of leveraging information and intelligence to inform that understanding of risk. So making that a more holistic approach, making it more seamless across the compliance functions, facilitating that sort of convergence of a risk understanding and risk profile is just super important. So ultimately taking the compliance posture from reactive to adaptive, proactive as well, but really adaptive so that instead of kind of putting out fires each time you find out something new has changed, really being forward thinking and continuously thinking about how your risk is changing so that you can, adapt to things in a more strategic way and in a more thoughtful way, as opposed to just kind of putting out those fires when they arise. And looking at the RBA as as a governance framework, not as so sort of in the past, we've looked at the RBA as really a governance framework, but what we want to start looking at it like is an operational capability and opportunity, right? So operational capability in the sense that the better and more consistently you understand your risks and the faster you adapt your controls to those risks, obviously the better your whole approach is going to be, the better you're going to be able to deter, detect, and prevent financial crime. But then an opportunity in the sense that the better your risk is managed and the more applicable your controls are to those types of risks, the better you're going to be at your business, right? Not the business of AML, but the business of, what every institution is in the business for, right? Making revenue, maintaining revenue, right? De-risking and, customer de-risking has always been an issue. But we want to look at the risk-based approach and the way technology can fuel a more continuous risk-based approach to create opportunities for institutions to retain that revenue relationship with the customers, more precisely estimate risk so that you're not de-risking wholly. You're very precisely and surgically looking at ways and looking at the risks that are going to either enable you to de-risk where it's appropriate or retain that customer and that business where it's also appropriate. So flip side of the coin is the threat environment has fundamentally changed. Everything is continuous, global, and rapidly evolving now. And, the institutions and software vendors like us aren't the only ones using this innovative technology. All of these different types of AI, the criminals are also using them, and they're probably going to increase their use of them. And as they do, they're going to get more sophisticated. The other sort of piece of things is that we're now able to use this technology to leverage a lot of the information that's out there that has kind of been buried in text heavy, sort of dense data sources that historically have been very difficult to leverage and exploit for their intelligence value. Well, now we have some AI tools that are definitely equipping us with much faster, much better ways of making sense of and sort of leveraging all of that rich information. So while the criminal innovation cycles are now moving faster, the compliance control cycles also have to move faster. And so the challenge is no longer access to data, it's really that interpretation of the data at speed and scale so that you are able to distill it into intelligence and use that intelligence to form, what your controls are going to look like and how they're going to need to change. There's, of course, mounting global and, in particular, U.S. attention growing around this issue. Just recently, as a matter of fact, last month, FATF had its Learning and Development Forum. That forum was actually focused on strengthening implementation of the RBA. But of course, historically, in the past several years, I would say 5 to 8 years, we've seen a lot of statements also from the Wolfsburg Group around the risk-based approach, around the risk assessment, and being effective in your programs, reasonable and risk-based programs. So we've seen a lot of narrative coming from not only regulators, but also global industry bodies about the risk-based approach, its value to the program, the fact that programs must be more effective, not just efficient. And all of that is based on outcomes. So a lot of interest in the area globally. And then more specifically with respect to the US, coincidentally, just a few days ago, we saw the notice of proposed rulemaking released that, follows that advanced notice of proposed rulemaking to reform the AML and CFT programs of US institutions. A couple of things around that, standardizing the risk assessment requirement. I think most important to the conversation we're having today is around the prompt update upon any change to the institution's risk profile. So, questions around what is prompt, questions around what are the requisite changes or what are the relevant changes that you need to be aware of? And really, how do you go about executing against that? How do you ensure that you are on top of those changes when they happen so that you can then promptly update? That's where a lot of the technology is going to come in and help you. And then, of course, incorporation of the U.S. national priorities into the risk assessment processes as appropriate. So again, as appropriate, what does that really mean? Is that going to depend on your understanding of risk? And again, what is fueling your understanding of risk and what is helping you achieve a better understanding of risk? We're going to look at the technology to help you with that. And then just quickly, we saw acceptive relief to the US CDD requirements. Again, this risk-based component. So there's a risk-based element now on when financial institutions are supposed to identify ultimate beneficial owners of legal entity customers. So again, all of this is really tracking back to the risk-based approach, the risk assessment, understanding your risks and how you are changing and calibrating your controls to deal with that. So ultimately, the way I see this playing out is really we've got to move from a periodic RBA to a continuous risk alignment, right? As I said before, threats are evolving continuously, so should controls. So in the context of the traditional risk-based approach, we think about, what is the risk level of the customer, product, geography, et cetera. Or we'd have manual ad hoc definitions of risks and threats. And we'd have static risk factors, scenarios, and parameters around those risk factors. In a continuous risk alignment approach, the way we'd want to frame this is really what is the evolving risk posture of the customer, of the product, of the geography that you're doing business within, et cetera. Looking at dynamic risk and threat definition and mapping rather than manual, ad hoc, static. Dynamic recalibration of risk factors, scenarios, and parameters. And again, this is where the technology is going to help you do that continuously. So this is where Agentic AI enters the equation. And it's really Agentic AI and a combination of large language models that create this new compliance capability that enables us to have continuous automated risk monitoring and really control calibration. There's definitely two key components to this: the risk understanding, the monitoring for and understanding that risk, and then ensuring that that understanding gets into your controls properly. So if we start out with Agentic AI, the technology behind all of this, Agentic AI is innovative technology that ultimately can autonomously observe, plan, execute, adapt, pursue different objectives, lots of different things that are going to be central to this type of process. In particular, it can interpret unstructured text, and that's where a lot of the risk intelligence information, especially external to your institutions, sits. So we want to be able to grasp that context, grasp those typologies, synthesize cross-source insights so that we can build that better, more holistic, more strategic understanding of risk. And then it also can enable the translation of threats into structured, actionable outputs, like things like new features, say to your customer risk rating model, or changes or calibrations to an existing detection or a new detection. And so ultimately what the Agentic AI is doing is it's leveraging all of those different threat sources and information sources that I mentioned earlier to derive these insights, right? So continuous risk monitoring and intelligence extraction. So looking at regulatory and supervisory publications, obviously, most of the people on this call will be very well aware of those types of notifications that come out from regulators globally with a lot of rich information, be it case studies, be it red flags, typologies. We want to exploit that. We want to leverage that to the highest, to the most, the highest worth that we can extract from it to inform our understanding of risk. Law enforcement and FIU alerts, FATF typology documents, enforcement actions and orders, sanctions and export control updates, litigation information, public and private intelligence where it's accessible. So much of this information essentially provides us with the type of intelligence that we need to inform our understanding of risk and our control calibration. And then we want to leverage all of that for risk definition and mapping. And there's so many things that you can do here, but just some of them: typology classification, risk tagging, mapping risks to your product, to your jurisdiction, to your customer exposure, identifying new and emerging threats. I mean, this is a huge one because a lot of times the biggest risks to the work and the institution is the risks that we're not yet aware of. And then alignment, of course, with priorities, whether they're the U.S. national priorities or a sort of equivalent convention in another country. They're not necessarily called priorities, but there's some equivalent convention that you want to align your program, your risk assessment, and all of your controls to. So, the technology enables that as well. So ultimately, where we really want to get to, at least with the work that Symphony AI is doing on this, is we want to get to using agentic AI as the engine for a living risk assessment, which in some ways is continuously updating in the background. Now, there might be certain components of this where it's not as conducive to a continuous approach, say for subjective surveys that might be done to the business units. Agentic AI might be able to help with that as well. But what we're really talking about here is leveraging both internal and external data and information that's typically used in the risk assessments to monitor for that information, to translate that learning into structured, actionable intelligence. This obviously would take a lot of time and effort for humans to execute, a lot of time and effort for humans to distill that information, make sense of it, put it into a format that is accessible and usable for the purposes of a risk assessment. AI can do this very, very quickly. It can go on to step 3, performing risk detection, definition, and mapping, identifying emerging vulnerabilities and exposure. So another piece of this whole approach is not just understanding your risks and calibrating your controls, but in some ways also conducting testing of those controls as if you're an adversary attempting to bypass the institution's controls. So in some way, agentic AI can also be leveraged to perform that kind of work too. Delivering control calibration recommendations. So I mentioned briefly before, things like additional customer risk rating features, or perhaps maybe you're using ones that are no longer very effective to estimating, at least in a precise way, your customer risk rating. Identifying new detection models or ways to refine your existing models, or potentially even sunsetting detections or models that have not been very effective, at least in actually detecting that risk, right? Because again, as the bodies and the regulators have said, it's really all about achieving an effective program, right? So whether it's understanding your risk or adequately allocating resources across your program for those most effective components of your program, a lot of that is going to be inherent in the calibration process, but it all tracks back to understanding what your risk is to begin with. And then step 6, autonomously recalibrating those controls. Now, of course, AI is still developing. A lot of institutions are still kind of trying to wrap their minds around AI, how they want to use AI, what their risk appetites are around AI. So not necessarily is every institution going to jump into that automatic recalibration right at the outset, right? This might take some time to get to, but really what this is the art of the possible. And we are building it, right? We are doing it. It's just a matter of determining what your appetite is for it and when on that sort of maturity curve when you think about bringing AI on and how you're going to continue to mature your program in its use of AI. That's going to be different for every institution, and that's okay. But we're building the technology that's going to enable you to do this, and that's the important part, because when you are ready to turn it on and when you are ready to use it, it's going to be there readily accessible for you. The other part is that, of course, we can't forget is ensuring that the guardrails are there, the governance is there, the human in the loop is there where it matters most, right? And so some of this will be out of the box, right? Some of this will be sort of consistent across institutions, and then some of it will certainly be on a case-by-case basis based on, an institution's particular appetite for those controls and inserting that human in the loop where it makes most sense for them. But that's going to be, very flexible and, of course, very aligned with, your approach and your appetite for risk and the proper level of governance. So ultimately, what we're looking at is enabling adaptive controls and really resource optimization. So, at least in the US's case, a lot of what they have been communicating, the regulators have been communicating as to why they're undertaking this effort to sort of modernize our AML CFT regulations here in the US is to facilitate resource optimization to those more risk-based, effective components of the program. So it's not just an exercise, to make your risk assessment more efficient, even though that's super important. But ultimately, what we're looking to help you with is optimizing your resources, how many resources you need, where those resources should be allocated. Should they be heavy on the technical side and the technology and the automation, and where do the humans fit into that equation? So the evidence that is driven by this agentic AI process can enable you to do a lot of that, right? Like I said, tune, create, and sunset transaction monitoring scenarios, identify new features, identify risk-aligned cohorts for EDD. So now you might, your EDD might be dependent on certain factors, right? Based on an agentic approach and understanding more about your risk profile, there might be other factors that are going to contribute to who or what you perform EDD on and how often you perform that EDD. You might be able to inform risk-aligned policy updates. So again, you might determine that now your policies are up to date and they're adequate. If your risk profile changes, you might determine that your policies also need to change based on that, or where you're doing business might need to change, or what products or services you're offering might need to change. So there's many more implications of taking this type of approach across the program and even across your business. So there's so much value to taking this kind of approach, employing this type of technology to really ultimately get that better understanding of risk and that risk intelligence. Critical principle, human oversight still remains central, as I mentioned in the previous slide, around having those guardrails. And I think the real value here is that the RBA is going to become continuous. And it's going to essentially enable control, adaptation, and resource alignment. And so the strategic imperative is that the RBA, the current way it is done, really is unsustainable, especially in a world where we have this type of technology at our fingertips now. Sure, it's not perfected in a lot of ways. It's moving at the speed of light. I'm sure you can all appreciate that. It's even moving fast for us as a software company. It's absolutely moving fast for you as well as the users. But ultimately, we have it at our fingertips now, and we have to think of creative and high value ways of implementing it and using it. And so ultimately, what this can enable you to do is maintain that continuous risk awareness, dynamically align your controls with real world threats. Real world, I think, is important because sometimes we tend to think that, we know all of our risks. We have a good understanding. All of our controls, we're doing pretty good on them. We're doing some consistent testing, but we're happy with them. Well, threats are moving faster. The criminals are becoming more sophisticated. So that sense of security might not be as strong anymore and might not be as strong for as long anymore. So we have to figure out ways that we can move faster, be nimble, and adapt more quickly and effectively. Improving effectiveness while optimizing resource allocation and costs, of course, and then strengthening regulatory defensibility. So, a key part of this isn't let these models run, do whatever they want, don't pay attention to them. All of this is going to have governance around it. It's going to have to be demonstrable and also defensible to the regulators. So, of course, we are taking that into account with everything that we build, including this approach. But, it's just important to know that it is doable. And that's something that you really want to partner with your vendor closely on. So ultimately, the future state is really not going to be whether your program is risk-based, but whether your program is going to demonstrate risk alignment. And that risk alignment is going to continuously change. So Lala, I'll stop there and see if we have any questions.
Thank you, Elizabeth. Thank you for really insightful presentation. And this actually indeed brings us to the Q&A part of the webinar. A reminder, if you have any question to ask, please post in the chat. In the meantime, we did receive several interesting questions sent to us directly. I think, Elizabeth, let's start with them. I'm going to read the first one. So what about customer risk rating? Would this agentic approach be able to help inform customer risk rating or just the risk assessment itself?
No, that's a great question. I think I did touch on that, but just to review again, yes, absolutely. I mean, the customer risk rating is a very important component, right, of your overall risk-based work in your program, right? And in fact, it ultimately will have impact on the business, right? Whether or not you keep that customer based on that risk rating and based on, things that develop during the customer's life cycle can obviously have impact on your business. So yes, absolutely, this is meant to help with that. Monitoring those different threat sources and threat information continuously is going to enable you to determine, are there additional risk factors that I need to incorporate into my customer risk rating? Are there ones that aren't as effective anymore, given the additional knowledge I've built around that particular risk factor or type of risk that I had been incorporating into my risk rating, but maybe now it's not as effective. It's not contributing significantly to precisely estimating that customer risk. So absolutely, the work that is being done here can contribute to refining your customer risk rating model, but also, segmenting customers for different models, right? Obviously, some banks will use one core model, other banks will segment and apply different customer risk rating models to those different segments. So it can help you carve out the customer cohorts applicable to a particular customer risk rating. So there's lots of different sort of value that you can derive here. And, it's all about getting creative and looking at how this technology works so that once you understand better how the technology works, you can come up with very new, very interesting ways of how to apply it. And that's really what we're trying to get at here. Like, there's a lot of traditional ways of applying this technology. We're doing it at Symphony AI, automating alert adjudication, SAR narrative drafting, automating that whole process, intelligence collection and case summaries, false positive reduction. And that's all great and that's all valuable. But the technology is so powerful that we really have to push into other elements of a financial crime program, other elements of a financial institution more broadly, even outside of the financial crime programs, because there's just so much that we can do with it.
Okay, wonderful. Let's move to the second question. Not all financial crime threat intelligence is equally credible or relevant. A FinCEN advisory carries different weight than an open source media report or a litigation filing. How does the system differentiate source quality and credibility when synthesizing threat information, and how does that differentiation get reflected in the confidence level or urgency assigned to a recommended control adjustment?
Very realistic question and a great question. So you absolutely need to be sort of scrutinizing your sources. So the automation can do that, but we understand that our clients are going to want some level of control over that. Not everybody sees the same source as the same value, right? Not everyone's, I mean, you could even boil it down to a regional aspect, right? What US regulators put out in terms of typologies and red flags isn't necessarily as important to a European institution or an Asia-based institution. Maybe their regulators are more important to them, and so on and so on. So in some respect, not every institution that employs this model and employs this type of approach is going to see those threat sources as at the same value or at the same level of sort of confidence, right? So we are building into our technology and our monitoring how you can, essentially weight or assign a weighting or a value to different types of sources, different categories of sources, be it a domestic regulator versus an international regulator versus maybe something that you got out of an academic journal, or something that you got out of an enforcement action, right? So all of those things, or a press piece, all of these things are different sources. They are different confidence levels, assigned to the information that's put out by those sources, and different ways that institutions, depending on their location, their jurisdiction, the regulator that they are primarily exposed to, will assign. So we are doing some of that work in an automated fashion, but we're also going to enable our clients to be able to adjust that, to their preference, right? So we don't want to make everything highly dependent on the human and have to have institutions, adjust everything, but we want to give the option where, there is that desire to be able to adjust that confidence level or adjust that weighting to different sources, at least in that respect.
Okay, thank you, Elizabeth. Continuing with questions, please can you speak to the explainability, auditability of the agent? What elements of the agent would the FI be able to audit?
Well, you need to be able to audit all elements of your agentic work. So, and I think a big part of this is going to be partnering with your vendors. So, of course, part of what we do at Symphony AI is, we monitor what the regulators are requiring. Obviously, this is definitely a moving target at this point. Some regulators are more forward leaning with their requirements around governance and explainability, some not as much. So some of this is a moving target right now, but we are staying up to date with what the regulators are requiring. We're building our products with that in mind, and we're developing documentation and information to, arm you and empower you with the information that you're going to need to be able to defend all of this and demonstrate what the models are doing, where the guardrails are, in particular, where the human in the loop is being inserted and what those humans are responsible to do, et cetera, et cetera, et cetera. But I do think, and I will emphasize, because a lot of this is still changing, right, with respect to regulatory guidance, it's imperative that you are working closely with your vendor, that you're really partnering with them to understand how the technology works, what governance and explainability is already built into your system, but where there might need to be additional guardrails built in that, you decide and you prefer to have. So some of that is going to be general and some of that's going to be institution based.
Okay, gotcha. These are all great questions. Thank you again to our audience. I'm going to read a few more. Does the Symphony AI model sit on top of our existing risk assessment application and access the accumulated risk and control information we have compiled already? Or do the risks and controls need to be entered separately into the Symphony AI model?
Yes. So some of this is still developing, right? We clearly you're going to want to use some of your previous information that you've done in your previous risk assessments to inform what a system like this would, continue to output, right? So that current and previous risk assessment work is not going to go away. There's a lot of value to that. What this is meant to do is essentially plug into your risk assessment system, right? So that it's informing it rather than replacing it, right? It's more of an intelligence system as opposed to a risk assessment platform, right? It's meant to go out, arm you with the information, distill information, understand what those risks are, recommend control calibration changes. It can even be used to recommend risk assessment changes. So your risk rating on a particular product or your risk rating on a particular customer type, right? And so on. It's meant to make recommendations for your your core risk assessment and the core platform that you use for that to be informed and to be changed, right? So it's not ripping and replacing your risk assessment platform. It's really meant to inform much of the work that's done within that and potentially enable you to shape it, right? Continue to refine it as you go forward and as you learn more about your risks and your exposure.
Thank you, Elizabeth. And next question. Is the agentic approach applying continuous risk alignment the same thing as what the industry refers to as perpetual KYC?
So it's similar. I think both the goal is to be less cyclical, less point in time, be it 6 months, be it a year, and more up to date, right? More up to the minute, right? Whatever you as the institution determine to be that cycle that's right for you. So is it every month the system would update? Is it every week? Is it every day? That's probably going to be something that, the institution would have to decide on. But it's very similar in nature in that it's trying to get closer to a real time, up to the minute, understanding of risk and risk recalibration, as opposed to being more point in time, snapshot, cyclical, that sort of thing. So yes.
Okay, thank you. And final question, I think, would the system also be able to infer the unknown unknowns from the company data, as opposed only looking at reporting regulatory threats? I'm thinking of a SIRA, Dutch implementation.
So I think where we're starting is, that source of truth, right? So what the regulators are putting out, what enforcement actions indicate, right? That's obviously, I think, where you'd want to start, because that is, I think, those sources that are going to be the most credible, right? And those sources that, at the bare minimum, regulators are going to look for you to incorporate and to be aware of. So if we go back to, the NPRM in the US, looking for you to be updating as you're aware, right? So, but how can you be aware if you're not properly leveraging all the information that's out there to help you be aware, right? And that's what this technology is all meant to do on a more continuous basis. So I think that's where we're starting, right? But once the system learns and gets better and gets access to additional data sources, right? Going back to the unknown unknowns comment, I think that's where, that's a question of sort of unsupervised learning, looking at very large data sets without any supervision to what the AI is doing to come up with what those threats might look like. So there's definitely an opportunity for that. There's obviously already AI that can do that, right? Unsupervised learning can certainly do that to surface those unknown unknowns. But I think what, in this context, what I think is particularly important about that point is that there are unknown unknowns, and it's going to be the responsibility of the institutions to understand better what those unknown unknowns are and take that knowledge, incorporate it into your risk-based approach, into your risk assessment, and therefore into calibration work, into remediation work, into even potentially look back work, right? So those unknown unknowns, wherever they come from, are going to be critically important to the risk-based approach.
Okay, fantastic. Thank you. And that brings us to the end of our session today. Elizabeth, thank you again for sharing your insights. And thank you to all our audience for joining and contributing to the discussion. Great questions. And if you have any questions, please, if any further questions, reach out to us directly at symphonyai.com or reach out to Elizabeth at elizabeth.callan@symphonyai.com. For now, thank you all. Stay well, and we'll see you at our next webinar very soon. Take care.
Thank you.